This is what the stock market is doing today. Again, there's turmoil in Hong Kong and Argentina, which just adds to the worries that investors have on the edge over the trade war. I'm looking at dollar strength and actually gold advancing. So there's a little bit of a risk-off mood. We'll see how that develops, but treasuries definitely steady with the yen, which held on to 4 sessions of gains. Joining us now for more on all of this, Tom, is Justin Carrigan, our Bloomberg managing editor for global markets. Justin, I know we want to talk about Argentina because that just added to some of the impetus out there where markets not really sure how to read this.
That's right. It's a fairly small part of the overall market universe, but it is one of those kind of old faithful type geezers of worry that come back to haunt us with regularity. Argentina, here we are again. We've got markets quite clearly under severe pressure. A little bit of stability today, but it's early days. Let's see what happens. And everyone really looking to see what kind of soothing words might be offered by not only Mauricio Macri, the current president, as to what's going on, but also from the Fernandez camp, which is now seen as the most likely contender, or at least the most likely creator of the next government in Argentina. Can they offer the market some kind of soothing words to suggest that that they will address what quite clearly is a very serious situation there?
Justin, we have great charts that we'll get to in a second, but if you saw the market falling out of bed yesterday, as an Argentine voter, would you actually change your vote?
Well, that's a great question. I think not, if one had to give a straight answer. I think most ordinary Argentines don't particularly care about the bond market. They might be marginally interested in the stock market, but I think they'd probably be most interested, of course, in the value of the peso in their pocket. But at the end of the day, given the very serious economic conditions on the ground among ordinary Argentines, then probably they're more focused on getting through the next few days and weeks, getting bread on the table and making sure that they can make ends meet. There would be, I suppose, a knock-on effect from the peso's decline in terms of inflation, but that's unlikely to show up before the true election in October. So I think the straight answer to your question, Francine, is I don't think many people will change positions here. I think the conditions are too unpleasant on the ground for Argentines.
Justin, we got to show a chart. It's the only reason Justin Carrigan will come on if we show the Bloomberg terminal. There's like 8 charts to show. I'm just going to show USD ARS, and this shows a further weakening of Argentinian peso out to 53. That was 45 yesterday morning before trading began. This is like a 9 o'clock, even 9:20 Wall Street time repricing. Justin, I did see knock-on effects. I saw Turkey weaken. I saw Brazilian real go out near 4 real. What's the contagion effect right now from our team?
Well, there are several strands to this, Tom. I think, first of all, we're not really at a significant contagion point. Most commentators will say that the likely fallout from Argentina will be contained. You look at the real yesterday, as you mentioned. Yes, it went through 4, but it was only a 1 percentage move. Same with the Mexican peso. So it's not really showing up yet. I think the point is that the backdrop globally is very negative. So this is happening at a very nervy time for the global markets in general. And as I say, that's really what is moving markets at the moment. If things globally start to turn around a bit, then then we're in a different situation. But there's no likelihood of that anytime soon, quite clearly.
It will be interesting to see as we measure the idiosyncratic versus the contagion. Justin Carrigan, thank you so much. Bloomberg managing editor for all of our global market coverage. They've had an extraordinary August so far. Willem Sels with us as well with HSBC Private Bank. Willem, this is just, again, one of the worries, and it's the idiosyncratic and when it doesn't. In your study of financial history, can you see it coming? I mean, can you see when everything coalesces together, or is it hopeless to try to game what that is?
Well, Argentina is a little bit usually off the radar screen, and I think that's why people were so surprised, because frankly, I mean, the polls have been giving, quite a big share of the vote to the opposition for months now. So it's a clear example of people just ignoring that. Also, probably people really looking for yield. And ignoring, the idiosyncratic risk, not doing their homework, not, picking the, looking at the fundamentals. We think that is very, very important because indeed, if you already start with a relatively low yield on the rest of your portfolio and then you have a loss on one of your bonds, you wipe out the whole return for the year.
But overall, Willem, when you look at Argentina, I mean, how much of this just makes you rethink some emerging markets that maybe investors don't understand so well politically, but also the fact that we still have dollar strength, and that would hurt them in 6, 7, 8 months? Yeah,
exactly. So I think it is being selective. So it's looking at, which are the countries where we have, a stabilization or an improvement of the macro imbalances, which are the countries where we have scope for interest rate cuts, where does inflation come down, etc. And that's that's the homework that one needs to do. And then you come out with Brazil, with China, and with Indonesia on top, I would say.
Willem, in the equity markets today, we're going to be looking at domestic large cap multinationals. Do you buy shares today? Do you wait it out? I mean, that's the normal reaction here, is to buy the big stuff, isn't it?
Yes, but well, big or I would say real, more quality, frankly, at this and resilience. And I think it's interesting to see that the shares that have been doing well, even actually before the correction that you had, when we still had asset price inflation over the last few months, the shares that have been doing well are the acyclicals, are the quality stocks, etc. And obviously, when you get a correction, when you get also more worries about a cyclical downturn, that message is reinforced.